This is a very, very important webinar because it really is going to expose and reveal a really, really important report, which is the London Open and Operating Report. There's a lot of work going on in the capital, and this really gives us an understanding of the scope and the scale and the depth of that. Of course, this is a collaboration. Like all good things, collaboration is the key to very, very good success. And in this case, it's a collaboration between Cortland, Home Views, Realise, and of course the UKAA. And it really does demonstrate the power of the collaboration in the new industry and what we're able to achieve through that collaboration and that sharing and that insight. And we bring this to the industry for the benefit of the industry. I'm joined today by Ian Murray from Cortland Consult, Ed Howe, also from Cortland, Rory Kramer from Home Views, and Gabrielle Mercado from Realise. Gentlemen, thank you very much for being here today. And I think we're going to go straight over to the panel to look at a summary of the presentation. Ed.
I'll just share my screen. There we go. Okay, all ready? Hello and welcome to our London Open and Operating Report webinar. This report, as Brendan says, has been produced by us, Cortland Consult, in collaboration with the UKAA and Home Views. This page just gives some of the key findings of our report. Given that 46% of all of the UK's operational BTR is located in London, we felt that the city deserved its own report separate to the UK-wide one that we published in October last year. There are 38,620 operational BTR homes in London across 171 separate developments, all of which have been built in the last 10 years since the concept of BTR first arrived in the UK. This represents 12% of all homes delivered in London over the last decade. We feel quite strongly that BTR is first and foremost a vehicle for delivering new homes for the UK, and this statistic proves that. With BTR now much more established, we expect BTR's share of new dwellings to increase significantly over the coming years. BTR is now a well-established asset class across the UK's major cities, and the sector is making inroads in suburban markets as well. Perhaps unsurprisingly, Newham and Southwark have led on BTR delivery, with BTR playing a key role in Stratford's post-Olympic legacy. Get Living are now managing over 2,600 homes in East Village. We see BTR delivering new homes across London's major opportunity areas, from Wembley Park to Elephant and Castle, Stratford, Ruby Triangle, Lewisham, Canary Wharf, the list goes on, and it proves BTR's ability to deliver new homes in a variety of different contexts. This chart examines London's largest operators, and what we found quite interesting was that 1/5 of all operational BTR homes in London are managed by either Greystar or Get Living. Greystar entered the London market in 2013 with a target of 9,600 BTR units in the capital. And if we include Greystar's pipeline, which is this one scheme here, 1,020 units at the biscuit factory in Bermondsey, Greystar now total nearly 8,900 units in the capital once that is completed. And so they've nearly achieved their original target. Greystar managed properties across London, with their biggest scheme being Greenford Quay in Ealing with over 2,100 units. But they also manage Coppermaker Square in Stratford and 10 Degrees in Croydon. But whereas Greystar's pipeline portfolio is quite spread out all over London, 88% of Get Living's London portfolio is concentrated at East Village in Stratford, where the firm manage over 2,600 homes. But they are diversifying. Elephant Central's first phase of 374 units opened in 2021, and from there, Get Living will go on to operate 2,000 homes in Elephant and Castle in total. And their site at Lewisham Gateway is under construction as well, with 424 units planned. London's North East sub-region has been a key beneficiary of build to rent, owing to the phenomenal regeneration of areas like Stratford, Hackney, Canary Wharf, Barking, and East London more generally over the last decade. Whereas conversely, North London, as shown on this pie chart here, which has traditionally been more developed and established, saw very little large-scale regeneration, therefore BTR. If all pipeline is delivered, North East London will boast nearly 25,000 BTR homes, with West in second place at 16,100. And this chart, I think, highlights how operational stock currently outpaces pipeline stock, which could represent a long-term problem for the sector in London. In London, we see this 50-50 split between operational and pipeline, with about 38,620 units operational and 34,128 in the pipeline. But in the regions outside London, it's more of a 25-75 split, with 38,000 BTR homes operational and over 110,000 in the pipeline. It could be that developers and investors are waiting to test how current stock performs in the market before investing in future pipeline in London. And these two charts help us further frame our argument about BTR being a vehicle for delivering new homes in the UK. BTR did not exist in the UK 10 years ago, and yet now 12% of the 308,000 new homes delivered across London over the last decade were classed as BTR. In Brent, this rises to 35%, accounting for the enormous BTR-led regeneration of Wembley Park, while in Newham, 33% of all new homes delivered were BTR. The boroughs at the top of this chart were some of the fastest growing local authorities in the UK in the last decade in terms of GDP, GVA, and population growth. It is well established that building new homes creates economic growth, and so we're starting to form an argument that BTR can foster and sustain economic growth as well as hit housing targets. BTR is playing a huge part in the successful regeneration of East London, with 5 out of the top 10 boroughs shown here located in East or South East London. There we go. The report contains a section on each of London's sub-regions, such as the one shown here for North East London. We have headline, operational and pipeline figures, as well as statistics on population growth taken from the 2021 census. North East London grew the fastest of any area, adding nearly 250,000 people to its population in the 10 years to 2021. We've also included a summary of development stages and BTR homes split by London Borough. Newham and Tower Hamlets have led on BTR delivery in North East London. Each section contains at least 3 operational case studies, as shown here on the right, where we've pulled together data on number of new homes, unit mix, and latest rents. We have partnered with Home Views to showcase these development scores and star ratings. Our maps for each sub-region show operational BTR as well as different stages of pipeline under construction, planning consented, and planning submitted. Meanwhile, we've also listed total pipeline for each sub-region as shown here, with development name, number of homes, developer, funder, and operator information, as well as locational information such as postcode and local authority. If you're doing any sort of rental benchmarking or just want to know what is in the market, this is the perfect report. This is the first definitive list and map charting BTR in London. It's the result of our team spending years documenting and tracking as many developments as possible, and we are incredibly proud to be offering it publicly for the first time. And alongside the map, alongside the report, we have also published an interactive map in collaboration with Home Views and Realise and the UKAA. And I'll show that now. Just kind of faff around with screen sharing. Where are we? There we go. So this interactive map, which I'll share a link to, or there'll be a link somewhere, I'm sure, shows the location of all of London's BTR developments that are analysed in our report. So you see on the side here that blue indicates completed, pink is under construction, and so on. So if we go to one scheme, let's go to Black Horse Mills in Walthamstow. If you click that, you can then get all of the information: development name, completion, who the sort of operator is, who the funder is, the number of units, unit mix, and then Home View's own star rating here, and their scores for facilities design, location, value management. If you were to click that, it goes through to the Home Views page, which we're all familiar with. And you can also test out pipeline. So let's see what is going on in Stratford. We have these 2 developments here. It's really, really useful for tracking and listing sort of pipeline and seeing what's in the market. And that's it from me. Thank you for listening. I'll go on mute.
You're muted, Brendan.
I just caught myself. Thank you. Yeah, that's. This shows this to be a powerful report, and backed up by the website, I think is a massively useful tool for the industry. But of course, this is not all this group has done. I mean, the group has produced 2 open and operating reports for the UK, 2022 and 2023. But on top of that, they've done what they call city snapshots, sort of Glasgow, Edinburgh, Sheffield, Bristol, Birmingham, Liverpool, and it's a huge quantum of work and massively useful to this industry. Ian, could you summarize your observations on the quality and the quantum of built-to-rent data that has built up over the last 10 years?
It's thanks. Morning, everybody. It is a great quantum of work, and it is a great quantity of information. And I guess, you know, having as somebody who's probably been through about 3 different new growth markets in my career, you always start off with a dearth of information. You just can't find it. And, you know, what you're doing is you're trying to formulate opinion based on, you know, what is scant amounts of data, and, you know, and pulling it together is quite difficult. Pulling it together probably hasn't got any easier, but the quantity of data and the quality of data has grown enormously. And, you know, that has allowed us to kind of really, truly start to drill down on what people want to live in and where they want to live, and, you know, what the tracks and the trends are. And the home views data is extremely important to us because it delivers that kind of what people actually like about built to rent, and what they like to pay rent for, and what they're looking for in terms of service. And then, you know, equally in the realised data, you know, it allows us to look at the socio-economic rent growth and profiling. You know, so when we're looking at a new development for a client, we can really truly understand A, where they should put it, and B, how successful it is likely to be if it's designed well and built well.
Thanks, Ian. And Rory, you know, understanding the market from a development perspective, as Ian's described, is massively useful. But you're looking at it from the other perspective, from the customer perspective. How has your data evolved over the years, and how easy was it to integrate it into these reports?
Well, firstly, congratulations to the Cortland Consult team for putting this together. I think it's an amazing bit of work, and being blunt, it's a lot of work to pull all of this information together. I mean, HomeViews is only 4.5 years old. When we set HomeViews up, the idea was to provide trustworthy and insightful insights into new homes. It wasn't just build to rent. And obviously we've started this business when build to rent has, you know, grown into what it is today, from really, you know, over the last 10 years from a standing start. I think from, you know, with my old hat on, having worked on the consultancy side for nearly 15 years, a lot of the data, particularly around design and that would, you know, put a bit of meat on the bone, identifying target markets, you know, what facilities should be included, was based on opinion. A lot of time it was based on the personal experience of the architects or the developers and the operators or the consultants. And I think what we're so excited about the evolution of our data is now there's 37,000 reviews, over 14,000 of which are in build to rent, covers over 90% of all completed build to rent stock in the UK. So there doesn't have to be any guesswork. You know, we can really look at what is working, what is best in class, what issues need to be addressed across a data set that covers the whole market, and not just build to rent, in new homes as well. So I think, and I think that would be the same in the evolution of, you know, Realise has provided this transparency at a national level, which was very difficult to get hold of before, as well as in London. So there is a lot more data at our disposal, but putting it together to create a report like this is still a lot of work. So congratulations to the team.
Gabriel, you're perhaps a large part of this engine as well. How has the evolution of this data improved, increased over the last 10 years?
What Ian was saying really resonated with me. So when I first started working in real estate, I worked at Quintain and then at Central Living, and Realise really came out from the frustration of not being able to find information about, you know, what was going on in the market. And here we are, you know, some years later, and it's quite amazing to see how much has changed. You know, data availability and you know, companies like Portland and like HomeViews, and joining all of these different disparate pieces together to be able to create something like this with, you know, you guys at the UKAA, to have this clear view now of what's going on in BTR is a totally different world to where we were, you know, 5 or 10 years ago. And I think it'll keep evolving. It's going to keep changing and improving, and eventually maybe we'll get to a point where we have like a complete transparency on what's happening in real estate. It's going to take a while, but I think we'll keep working on it, right?
So it seems the build to rent is continuing the data revolution, the digital revolution in society at large, but to very, very positive results. And I think, again, I go back to my earlier point on collaboration. that this is possible through collaboration and a willingness and an ability to share. And I think that's a message that I think as the chief executive of the UKAA, I want to get out there, because our industry does need to show what is possible as it grows and matures. But Ed, if I come back to you, can you just summarize what you would say are the top line key takeaways from the London report?
I think it's fairly obvious. Well, I mean, it sounds obvious, but it might not be obvious to some that BTR seems to follow those major regeneration areas. So it seems to be a sort of a key headline now in the regeneration of Stratford, in Canary Wharf, in Nine Elms, in Wembley. It seems to be this really effective way of getting money into housing and delivering new housing. In a way that I'm not sure we ever saw before with these huge regeneration projects. It seems to be a really good way of getting money into these regeneration projects and helping them sort of materialise. But also interesting to see that sort of places like East London and North East London seem to be key beneficiaries. These areas were probably not as desirable maybe 10, 20 years ago. I think BTR has played a really key role in making these areas desirable and creating new places in these areas for people to live. You know, places like Canning Town or even Stratford wouldn't have really crossed people's minds 20 years ago, whereas now they are, because of areas like East Village, which have completely transformed the areas that they're in. So I think that's.
I mean, I sometimes liken build to rent in a regeneration perspective or dynamic. I liken build to rent as sort of an anchor tenant in retail development, where if you get a good old slug of build to rent in there, you know, we like to lease up quickly, we like to get people in place, and that talks to footfall, and that talks to the enabling of the placemaking. I mean, placemaking is great, but without people, it's not much of a place. So getting people, build to rent seems to have that ability to be, you know, the first in and getting life into a place. So I think that's really an important dynamic that perhaps sales has maybe not delivered quite as quickly. So Ian, if I can ask you the same sort of question, from a consultancy perspective, you're advising clients about where they should go, how they should go, what they should go. How do you see this data that's been published assisting that process?
I mean, I think we're still in a scenario where we turn up in boroughs or regions where, you know, there is a bit of a resistance to build to rent, and there's a misconception as to what build to rent is. You know, it's yuppies and tower blocks is the kind of standard response. I mean, this data empirically proves that GDP, population growth, you know, the actual economy of a borough can benefit massively from welcoming BTR in. Now, you know, we're looking at reports in the press this week of places like Woking, you know, who are, you know, effectively bust, you know, who did not, you know, embrace BTR in the first instance and actually were quite resistant to it. And yet, you know, we're looking at boroughs in this report which are clearly, you know, inviting BTR and facilitating BTR, and they're benefiting from that. Because, I mean, all of us who know about what a BTR development does for community round about it, I mean, it injects a lot of economic benefit from the people who live there, spending money in the local community. We invite the community in so that you end up with, you know, running clubs and cycling clubs and other different kinds of things. And, you know, when you really truly understand the dynamic of a BTR community, you can actually see that it can be a complete catalyst for growth within a location. And I think this report is probably one of the most empiric things I've seen that kind of proves that, you know, categorically.
I mean, I agree with that. I mean, I think the investment case for build to rent is now well made. What we need to develop is the narrative around its social value. And I think a lot of what we're describing here is the social value of build to rent, the emphasis on community, the fact that we can get regeneration going quickly. Rory, if I turn to you, who look at it particularly from a customer perspective, what is the social value that you see build to rent being able to deliver and is demonstrated in this report?
Well, I think you, Ian, and yourself, Brendan, hit the nail on the head. There's definitely still an education process to help local authorities right across the country and even in London to really understand build to rent from a standing start. You know, there is a preconception in a lot of places. I think what our data shows, and in fact we've hosted a roundtable with the planning advisors, BCG, Brendan, you were part of that. But what our data shows is that, like, the fundamentals of build to rent provides genuine communities, and communities that people say, you know, we've never had this rental experience before. This, you know, we are settled here, we are forming a base here. You know, that will be proven by lease terms as well. If you speak to various operators. So I think sharing that and as a base position that build to rent is providing genuine communities and homes, and also in a lot of cases those communities are curated. So Ian mentioned, you know, the fact that there are cycling clubs, running clubs, dog walking clubs, and that isn't necessarily just open to residents. And also I think a big point in this is, having worked in the sales market for a very long time, obviously when you've got a regeneration project of thousands of units, you have to phase that project so you can, you know, facilitate the sales by phase. And I think marrying that with build to rent means that you can have, you know, a 400 or 500 unit building fully operational with facilities, with retail in the ground floor, and lived in a much shorter space of time. And that is a huge anchor. It's a placemaking anchor. And I think that's obviously, you know, what we've seen in the north and northeast of London, and some of the best examples being Quintain and East Village, but also around Tottenham Hale, with all the build to rent schemes there, and also with what Argent Related will be delivering in Brent Cross and the other sites that they have. So yeah, I think build to rent's use to kind of kickstart regeneration and to facilitate regeneration is clear to see. There's great case studies, but I do think there's still an education for local authorities to get comfortable and understand what the basics of what build to rent provides to the residents and the communities around them as well.
Thank you, indeed, and really in a lot of ways, Gabriel, I'd like you to comment on the same thing. I suppose more from a socio-economic perspective. I guess you would be an advocate for publishing data, or gathering and publishing data as part of what Realize do. What is the importance of data in the decision-making process? What data do we still need to think about getting? And could you just talk around that a little bit? How important is data in our processes?
It's now becoming essential. You know, we hear from various clients how very important it is to have good data in order to enable good decision making. Otherwise, you know, you're kind of stumbling in the dark to an extent, trying to feel your way around problems, whereas, you know, data is your proverbial torch. So in that sense, it's absolutely essential. I think information that is still key that's missing, which is where this report starts to get into, is to do with the actual operations of buildings and the operations of different units. Something that we're looking at is how to better understand operating costs of buildings, particularly BTR developments. And that's going to be something that evolves over time. You know, as more units become available, we should be able to get hold of more data and then aggregate it, and then give people things like interesting benchmarks on, you know, how much are actual maintenance costs and facilities management costs and that sort of thing. That's a bit that's missing at the moment that I think is super key. We're obviously complete data nerds over here at Realize, so the more data we can get wherever we can get it from, we love it. We're always trying to pull new and interesting things together, but I think that information about the life cycle of buildings and how they're operated and what that costs, and, you know, eventually I'd love to be able to get it to understand the point where we could understand, you know, should you have a lift from Otis installed in a building or a lift from Schindler installed in a building, because we can get the data to understand, you know, which one operates better over the long term.
I mean, this sort of segmentation of components, of elements, of operations and dynamics within the buildings, and being able to attach data to that could be meaningful is I guess the tsunami of data that we're in already and is happening. And it's about making sense of that, I suppose. You know, we have the data, but what's the question? Or perhaps it's more around I have a hunch about something, or here's the answer. Now I found the data to support that. Is that just a natural phenomenon? Is that something that we should be careful of? Is that an AI risk? How do we bring clarity, objectivity, and discernment to the data, and to make sure that we are using it correctly, and that it's giving us the right kind of answers that we need? Ian, do you want to start?
Yeah. So I mean, I think if you're asking now about socio-economic, demographic information to support the viability of a project in a location, I think we're pretty clear that we've got the parenthesis around that information to the point where we can disseminate risk by giving you the correct answer in that. I think Gabrielle's touched on it, and I know you want to touch on it, Brendan, about the sharing of operational data. I mean, frankly, the operational data, there is still this cold side of the finger, 25% gross to net that everybody talks about. Now, I know for a fact that there are portfolios that are operating above that, and those are portfolios that probably in their initial investment case put 25% below into their gross to net calculations for viability. However, rents have grown faster, so that's probably balanced the equation. And I do know that there are portfolios that are running leaner than that, but at the same time, I think they're probably not enjoying HomeView's star ratings as quite as good as the ones that are having a higher gross to net and spending more on services and operations. We're still probably not in an environment where we've got enough open and operating stock that's been open and operating for a long enough period of time to be called stabilized. I mean, even with 80,000 units open and operating across the whole of the UK and half of that in London, it's still only a few years since the last of that opened. And it really does take time for that data to stabilize and to give a true reflection of the picture. I mean, even taking into account, whole life costs, which we get into quite a bit recently. I mean, whole life costs do not play a part in the gross to nets in the first 5 years at all. And probably, don't really start to impact until about year 8 or 9. So it's just the length of time that we have data for that is probably preventing us being more firm on our operating costs. And at the moment, we're probably, from an operating cost perspective, we're probably the 5 years back that we were on the socioeconomic data that we now are pretty set on and pretty comfortable with.
I mean, I think what's important is that we're anticipating where the next data requirement is and starting to work on that already, whether it be operational, which of course is something that the UKAA is looking at very, very hard, but also whole life or embodied carbon, whole life costings, and all that sort of thing. Rory and Gabrielle, if I could ask a similar question of you, how do you see this evolving? How do we see us matching the data to the question in a sensible, reasonable way?
Well, Gav, shall I start on that? We just HomeView's just launched HomeViews Pro, which Ian was a pioneer of and is a subscriber of. And HomeViews Pro is the evolution of us using our data and ingesting new data. So HomeViews Pro gives anyone access, so architects, construction companies, consultants, investors, access to our 37,000 reviews. We've overlaid all of the facilities data for all open and operational build to rent schemes that we have reviews on. We've ingested asking price rents for build to rent schemes, so you can start to see what gets you a premium. At least at an asking price rent. Now, if you're going to ask me what the next evolution of that is achieved rents. And that's probably an elephant of the room, as well as operational costs here in terms of sharing data. Obviously, in the States, there's a huge pool of information around achieved rents and what's included in rents. And in the UK, it's still relatively opaque. But I think that HomeViews Pro for us was that evolution, was to provide the data that verified residents are giving, and to allow the real estate and residential sector at large to benefit, to build better homes and to form better design arguments. And when people are going through difficult VE discussions, which everyone is at the moment, making sure you draw a line in the sand of what needs to be included to ensure this building is going to operate at its full potential. So I think Pro for us is, you know, it's the start of a journey. It's live. We've got some fantastic feedback already. But I think also that coming back to collaboration, you know, all of these data sources rely on, and the best data relies on collaboration moving forward. So that would be my take on kind of the next steps from a HomeView's perspective.
I can feel some more collaboration coming on, Rory, because we've got a new product that's in beta at the moment that's a portfolio monitoring tool that does basically valuation and forecasting, but there's elements in there for documentation and keeping track of like what's actually going on in a building. So I might hit you up after this for a conversation on that subject. But yeah, I totally agree. And I think Brendan, you started off with this question about, you know, not making data. You know, you come up with a hypothesis, but don't try and force the data to fit the hypothesis. And I was thinking, well, the scientific method is you come up with a hypothesis and then you try and see if it's correct or not. But you have to be willing to accept that you're not correct sometimes and not just try and force the data to show that you are. Definitely been in situations in the past where you get an answer that somebody doesn't like and they try and fit the data to it. But you have to, because, you know, if you get enough information of enough good quality and it shows you a particular answer, then you have to go with that answer. You can't try and do it the other way around.
No, indeed, although we probably have from time to time.
It does happen from time to time.
The one point I would make, and you know, this is probably not helping our, you know, very data-driven webinar, but you know, I remember when we were working with Apache Capital and Moda and Angel Gardens and setting the initial rents, you know, and we're talking about 5 years before this opened. You know, the viability at that point, I mean, that was steamy rents at the time, you know, and then it came to, I remember sitting in the offices and setting the rents with the whole team. There was about 20 of us, you know, what are we going to release the rents at? And then, you know, the building opened and it has blown all of those numbers out of the water. It is, you know, it has outperformed by some margin, and to a certain extent, it has helped the narrative of outperformance of build to rent over standard embedded market. But, you know, so we still have to kind of keep a head down on a lid on what projecting data is and how real it is, as opposed to, you know, we can't really quantify what kind of explosive impact something would have, you know. So I still go back to the empirical data has got to be the foundation of what we're doing. And, you know, if you're looking at risks in particular, any investor will rely on data that's provable. To Gabriel's point, you know, we need to be saying that it is correct. So, you know, it's important that that data has a very solid foundation.
I mean, that's very, very clear and a very important point as we move into the next phases of our data collection. But it may not be a fair presumption or expectation, but we do expect our data to have a crystal ball as well. And, you know, I think a lot of the industry is going to try and use data to predict trends, to look at what might be coming down the track, etc. You've really touched on this already. But if I sort of go back to Ed on this, I mean, you've been looking at this report now for probably too long in some respects for your own sanity. But what trends do you see? What are the shifts? What are the subtle moves in the market that you see coming through?
Oh, God. Well, it seems as though there's a lot of smaller companies starting to get involved in BTR as well. It does feel as though every time I go on LinkedIn, there's a new sort of company that is getting involved in it. And it makes sense because it does seem to be this formula that is working. And to be honest, I'm not sure. Ian, can you help out with this one? Smaller trends?
It's, I mean, I suppose the trends that I'm seeing are, you know, I think if you look back 5 or 8 years ago, you know, something like the Moda product, everybody was talking about it as being almost like a luxury product. It was almost like this, you know, 5-star product and service. I would genuinely say that the vanilla BTR, the kind of central strata of BTR, is a very high quality product because it has to be built to last for first thing. So the whole life side of things is really important. So you get better kitchens and bathrooms and floor finishes and ironmongery. You know, those things are just at a higher quality. So I would say that trend from my perspective is that if you were to walk into a build to rent development, you're probably going to walk into a higher quality home than you will if you're going to go and buy a home, because the whole life cost side of things is so important that actually the whole quality. The quality of amenity spaces is also extremely high. And I think, you know, what HomeView's data has particularly done is support what amenity is important to people in a build to rent environment. Now, you know, in a higher rental environment, you're probably going to get more amenity because it's more affordable. And in a lower rental environment, it will be less amenity. But there is a kind of a core, you know, it's a lounge, it's a gym. A lot of people are doing private spaces for dining and such like. Outdoor space is extremely important. You know, these trends are now becoming very, very common in the market, and that, you know, even, you know, schemes in more peripheral areas are being built with, I would say, quite high quality amenity. So I think, you know, across the board, it's very easy to demonstrate the quality and the trend is for quality and longevity. And I think, you know, being part of the UKAA's whole life group and going through a project in Glasgow at the moment where carbon, embodied carbon and whole life carbon is an empirical, an important part of the planning process, we're actually seeing projects that are going to be more environmentally conscious, going to last longer. They're not going to be demolished. They're going to be recycled, you know, furniture, etc. So I think the trend is just for a move to quality and a move to low environmental impact.
Yeah, and Ian, Ian touched on. I drew a blank when you asked your first question. Sorry, Brandon. But one big trend that I'm seeing is that BTR schemes are coming up now in sort of smaller and more commuter areas, as Ian touched on. Whereas it used to be sort of just London Zone 2 and 3, and then the big regional cities. It is now places like Woking and smaller places like Slough and things like that, the commuter regions. I think developers are starting to look for those opportunities, which has been really interesting to see. And that's good as well for these smaller towns, because as we said earlier, BTR is an anchor, I like that, an anchor for regeneration. And if we can get that going in smaller towns like Stockport and Bolton and Greater Manchester and places like that, I think that's a really good thing for these towns. Yeah.
I mean, I think it's clear that build to rent is a national solution. It may not be the panacea for the housing crisis, but we have a big part to play, and it is a nationally deliverable proposition. I think that's really, really important. But to look at this trending thing, and I agree I agree that there's, you know, a much richer regional spread, if you like. The flight to quality we are seeing all over the place. In fact, increasingly, even in the single family housing side of things, there's a real difference between the quality expectations around rent and sales that's manifesting now. And what that seems to suggest, and it's coming from various quarters, is the rise of the performance brief. So if we think about the sales environment, which is the dominant culture in development, it's about getting the right quality, building it as quickly and as well as possible, and moving on. But because build to rent is a long income model and a long-term hold, the interest in and thoughtfulness in going into what is necessary for that longer term hold is increasing, and it's coming from various directions. It's coming from money that looking at the how capital and the investors are looking at that and what their own ESG criteria might be. That is having an influence, much greater influence than I think it has historically in development. It's coming from compliance, but it's also coming from the market, Rory. You know, we are seeing a rise in the expectation or the value associated, maybe not the expectation, but the value associated with build to rent and what its unique proposition offers by those who live in it. Could you comment on that, please?
Well, I think there's a couple of things I want to stress. So firstly, in terms of the longevity and the long-term interest of an investor within a build-to-rent building, I think that's kind of best illustrated where HomeView's scores are the contractual KPIs between operators and investors. So they cannot drop below a certain score, they can't drop below a sort of ranking within an area guide without it affecting the contract with that operator. So with the investor, sorry, and we've seen this across multiple operator brands, and we never foresaw that when we set home views up. It's actually becomes a contractual KPI and a real benchmark of quality and service within the sector. And you know, that is for the long term. That's not just for a period. So I think to go back to that difference of the build to rent, you know, being held to account over a long term, obviously that has a huge benefit on retaining tenants, you know, the ability to push rents. So it makes perfect sense from an investor's perspective. I think going to the point you mentioned about sustainability, one of the questions we started asking all residents is, are environmentally sustainable features in your home important to you? Yes or no? They then select features of their home that are important to them. And what's really interesting within that data is you know, that it's not really being marketed within new homes in general. You have some, you know, eco-focused developers, particularly on the sales side. But I think the way that, talking about a trend, the way that people will choose their home over the next 5 to 10 years will be based on its green credentials. And that isn't always, you know, people I think need a lot of education on modern construction methods, the benefits of, you know, potentially an office to resi conversion. But there are more fundamental things, like, for instance, recycling is kind of universally the number one most important feature of the home. That's because they see it every day, they use it every day. And we were with Long Harbour recently, who are a partner of ours, and actually seeing those stats made them think, well, should we turbocharge the recycling offering on our homes, on our flats? So you have a fantastic, you know, food recycling, glass recycling, everything's compartmentalized, they can see it working, they know where it's going. And so I think trends around, you know, ESG and sustainability, around how people make choices, are obvious. I mean, we're seeing it in the electric car sales at the moment. And I think that, you know, build to rent really has the power and also direct benefits of recognizing that, particularly with investors' ESG agendas moving forward as well.
I mean, interesting research from JLL and Knight Frank on consumer behavior showed that the second most important decision about moving, now that's whether you move to sales or rent, but the second most important decision was on the energy performance of the home and essentially the energy bill. Now, I think this is an incredibly important milestone for our industry, because it has taken the green agenda out of the sort of technocratic design world, if you like, and build world into the consumer culture, and that's going to have a profound effect. So to your point on, you know, environmental factors being a key part of a decision-making process, I think that we will see that. What I also see, though, is that the standards set by the build-to-rent industry for itself are already very, very high. And indeed, when I speak to investors and operators, they simply say, we're not going to hang around and wait for government. We're going to go set our own standard and move forward. And indeed, the UKAA has launched a code of practice for the industry that I'm sure will absorb some of these matters. So it's interesting, is really showing leadership in the market, not just from a development perspective and a standards perspective, recognizing the importance of meeting consumer expectations for them, but also for the investors, and that link between, you know, using your benchmarks as part of an investment assessment or performance criteria. I think that's quite novel, and I think that in the sense that this type of data has not been used in that way before in our industry, in real estate generally. And I think it's again showing the build to rent's power to pioneer new ways of living, to pioneer new ways of assessing how successful that living is, and hopefully that will continue. But I'm guessing that there must still be gaps. How do we fill the gaps within the data? You know, and where and how long might that take? So, Ian, do you want to touch on that?
Well, I mean, I think actually I would probably ask that question of Gabriel, because
Yes,
he's probably a more data gatherer than even we are.
I was hoping you were going to take it, Ian, because that's not an
I'll take it, everyone.
That's a hard one. Because there is just so much potential out there for information and data that, you know, we could be getting hold of. We're still relatively early days in the journey. I realize it's been around for about, what, 6 years or so. You know, these BTR developments are, you know, intended to be lasting 40, 50 years or so.
I mean, if you take, socioeconomic and demographic data just as the kind of baseline stuff, I mean, quite simply, it requires local authorities and government to collect data and then publish it into the public domain. We can't go and gather some of this data just, of our own accord. So, and there are cycles of that data being updated that you really have, if any of us in this data world are keeping an eye on, it's when the next set of data is published by the ONS or whatever it is, or on a particular, local authorities who are switched on to the idea that data supports investment are publishing more data than others, because they understand the value of that data improving a viability of a business case. So therefore, they're investing money in producing the data that therefore catalyzes the investment. Those that don't publish the same amount of data, we will have difficulty proving the viability of somewhere where there is data that's 5 years out of date. For instance, it was a great step forward to get the census data in 2021 because, the data was getting quite old in the census side of things. So, I mean, across the board, we obviously subscribe to HomeViews Pro, we have subscribed to Realize, we also have Experian, we have multiple other databases. The quantum of data is definitely improving and the quality of it is getting better. But I suppose, and it would be remiss of me not to say this as a consultant, the skill is joining the dots between all of the different bits of data. And I mean, Ed is a master of that. That's why, he's the lead person in this report, and that this report looks so good, is because he is extremely good at joining the dots. But when you join the dots and you get data that says this local authority has a very high quantity of BTR, but it also has a very high GDP, it has a high population growth, it's earning money, all of a sudden your business case from a government point of view improves.
I mean, I think that's really remarkable, Ed, that you're able to draw out so many more, join the dots between so many more things. I go back to my point on social value and recognizing that there's a wide spectrum of parts of society that are touched by build to rent when it comes in and is successful. Again, I must reiterate, we don't see build to rent as a panacea. It produces very, very good quality product and will have a very positive impact. It's what we need to map is the extent of that positivity and hold it up as an example for how I think regeneration and housing and the management of housing and the people within them can be learned by the development world more generally, because I think there's some very important lessons here. Where are the areas within that wider socioeconomic, that demographic space? What would you like to see being connected?
I suppose it would be good. It would be quite difficult at the moment to extrapolate the benefit of sort of BTR, the benefit that BTR is having, just because of, especially in cities like London and Manchester and Birmingham, there's lots of other development and lots of other factors that are coming into it. I suppose I'd personally like more up-to-date population data, more up-to-date socioeconomic data. As Ian touched on, in some cases we have to wait 10 years for this stuff. And the ONS Census 2021 data is brilliant, and it gets better every decade, because now we have all of these interactive maps and we have all of these incredible charts that they've released. I suppose I'd like the data to be released more regularly, because even when they do the sort of the mid-year estimates, that's been put on hold now since 2020 because of the census. So now we're in 2023 and we're still using 2021 and 2020 data in some cases. So I think the sort of the tempo of data being released could be more frequent. I don't know how they would achieve that though.
Okay, so there's, again, I mean, it goes back to the collaboration card, doesn't it? I mean, government is collaborating, but I think as the value of data increases in society, we perhaps need some of that information to be gathered and produced and distributed in different timescales to the traditional approach. So we can see movement, I guess, or the need for movement all over the place. But I think the challenge of this group is to always draw all of that data and siphon it down and making it relevant to build to rent. So as we start to move to the end of the session, and we want to talk about the updates in a moment, but if I could go around the panel and just start to, maybe just a snapshot of where you think we are now, where we might be going, what do you think build to rent specifically needs to think about in how it produces and just presents its data. I mean, if we look at the build to rent map, you can start to do some studies of sites and all the things associated with the physical development. And that's very, very clear, and that's really valuable information. But as we look at the sort of the other aspects, the social value aspects, the customer aspects, it's all being knitted together quite usefully in these reports. Where do we go from here? Rory, do you want to start with that?
I think I mentioned it before. I think one of the base case, but Ed just illustrated that there's 38,000 operational units in London. There's a 34,000 unit pipeline. Now we know that deals can be done to forward purchase for sale schemes that will probably bulk up, particularly in the current sales market conditions, subject to the investor market and the debt available, but hopefully that will supplement that. But for me, I think one of the key places to start is educating local authorities, planners, and Westminster. We've got a Labour government coming in who's still coming in. Sorry, I'm not Mystic Meg. Potentially coming in, who are putting home ownership at the top of the agenda. Rightly so. It's one of the key sort of vote winners, but it doesn't bode well for the build to rent sector in terms of gaining that traction that we know if we were given the support that we could get. So I would say start there. And then I think my kind of nirvana of data, because let's face it, death by data is a real thing. You can have too much and you can't use it. But for me, where I see and what I think we're creating the beginnings of here is, okay, where should we put our money? Where are the supply and demand dynamics? What are the affordability dynamics? What should we build based on the resident feedback data? What are the best performing assets? What are going to get us our best values? What's right for the target market? And then also, to Gab's point, in terms of really the operational data as well, and not just what should we build, but what can we afford to build? What's going to make this building flourish and be a great investment asset moving forward? And I think we're not far away from linking all of that together and speaking to some of the biggest investors in this space who are in and looking to come in. That for them, it has a huge de-risking factor. And I think for me, that's a really exciting opportunity. But we are definitely on a mission to use our data, which shows that build to rent residents are the happiest residents in new homes, as a starting point to help increase this pipeline and help to make the expansion of this sector as fast as possible.
Yeah, do you want to follow that up?
Just to say, I very much agree with what Rory's saying there. That would be the ideal outcome. And I think as a little aside, I saw this question pop up from somebody that was watching that was asking about, does the build to sell market have something to learn from build to rent? And I think the answer is yes, ultimately, because there's different time scales there of build to rent development supposed to last, at least 40 years. Build to sell is, the developer's done, wash their hands as soon as they sold it. And I think having that information about the kind of people that want to live in these different places and what facilities and amenities work best, are affordable, don't break down, that people enjoy the most, is going to really help further steer the market in the right direction, whatever that right direction turns out to be, and can then lead the rest of the market, hopefully, as well.
No, indeed.
Can I just add to that, Brendan? Sorry, because I suppose just in defense of for sale developers, I agree that there could be a lot to learn. I think the core really is if you strip back the ratings that we have and you look at single family housing operated unit on one side of the cul-de-sac to a for sale unit on the other, I think what comes through, because that's really stripping back any of the amenity provision or the facility provision, is the fact that a build to rent tenant has not had to go through delays of delivery, maybe build quality issues, snagging issues. They don't have that experience that can taint the resident experience moving forward. But then also the snagging's been done professionally. They may have upgraded the spec to last for longer, and they have security of tenure. and in the long term. So I do think that you know, that there's obviously Build to Rent is the best performing. I think a lot of developers do deliver a fantastic product, but I think the fundamentals of someone owning and having an interest in a building for its lifetime mean that it is managed to its optimum potential, which you know, the for sale model in some cases isn't set up to do that in the long term.
I agree, and I think that what's clear here is that Build to Rent listens to its customers perhaps a little bit more than others, and I think that's really part of the success, and goes back to how you maintain the value of that investment is looking after your customers, basically. Ian, I'm going to hand over the last few moments to you
I don't honestly think I could finish on a better example of what BTR should be like. It's about this, you know, whole life. It's, you know, making a good decision at the front end that affects the life. I mean, you know, we obviously have all spent quite a bit of time looking at the US market, and our own company is, you know, a $22.5 billion, 83,500 unit apartment, you know, business in the US. I can tell you that Cortland in the US, the most important people within the head office building are the people who deal with the customers. You know, our head of resident experience used to be the head of Disney and the Atlanta Falcons, you know, fan experience. You know, our business has learned that happy people at the front end, you know, happy people in their homes, you know, as Brendan has coined the phrase many years ago, happy people will give you money. But ultimately, you know, people who score their buildings at the highest home view star ratings are living in buildings that are being well managed and well serviced. Now, our job from the development side is to build the 4 good walls around them that make that living experience phenomenal, because they're living in a fantastic place. The operational businesses have the requirement to deliver service within those buildings, and if we are very, very good at it, it'll be easier to deliver service in buildings that are well designed and well maintained. So we have all this data. We are capable of putting these buildings on the ground. Not only are we capable of putting them on the ground, but we're capable of making them perform and be environmentally conscious and zero carbon. I mean, we're in a great space at the moment. A collaboration like this has been a joy for us, because, you know, we're working with probably the 2 lead data companies within in this environment. You know, and that partnership has meant that our project for building this open and operating report for UKAA and the map that goes with it, you know, can be as high quality as it is and useful to anybody that reads it and anybody that uses it. So I'm delighted.
I think the industry is delighted, Ian, and thank you to everybody for their contribution. Before we end off, we have about a minute left. Ian, if I could just check, we're going to get an update on this. How regularly?
So I think we're aiming to update this about every 6 months. I mean, currently we now have an open and operating report that covers the whole of the UK. If you put the 2 ends together, the previous half of it, which excluded London, is obviously now 6 months out of date. So we will update that, and we'll have a full update set, you know, probably in time for the UKAA conference on the 2nd of November.
Yeah.
We'll continue to update the monthly snapshots, so I can't remember what the next one is. Ed will probably know better than I would.
Sheffield.
We'll look forward to that. I think it's been, thank you very much, everybody. It's been an absolutely fascinating and educational session. I think the big takeaways from an industry perspective are collaboration. The other takeaway is quality, that we're producing a level of quality because of the way we are structured and built to rent, which is starting to set a different benchmark for the experience of our customers. And as Rory has pointed out, the relationship between that customer experience and the quality of that customer experience is a direct investment benchmark. And I can see that that's going to be an increasingly applied dynamic within the industry. And of course, Gabrielle and Ed are sitting behind the scenes, crunching numbers and pulling things and drawing out relationships, which perhaps we'd always had a sense about and intuitively understood was important, but they're showing us how to really make it important and applicable to our industry. So I think we can take from this that Build to Rent is innovating, it is being creative, it's showing great leadership, and it's the proof of the pudding is in the eating. So thank you very much to everybody, and look forward to more events from the UKAA, which will go out through our normal channels. Thank you very much.